peak E. But there's also a chance for an alternate wave count. I don't really want to get into the alternate count right now. I'm waiting for these letters just to go alphabetically up with a chance, and let me just go there right now, that the Dow, the cash Dow, would go to, it's also leg F/B, will go to maybe just one more peak. I don't think we're going to get much more than that, just in the very short term before we have a pullback. And I'll go through the nitty-gritties in a moment. But let's go through a couple of other things. We're going to go to the 10-minute chart right now. I know that Darrell likes to look at it. So let me just show you something. I wonder if I've got my blank chart. I had it already just a short while ago, and I had a little bit of an issue. So I was so busy with that I almost missed my opportunity to come right back here at 1 o'clock Eastern Time. There it is. I wanted to put up what I call the naked chart. There's just nothing here. You've got candlesticks, and that's about it. Let me just show you something that we always look for in the Chapman wave methodology. I'm going to just keep going back here. Within the context of finding the lowest low bar and merely counting each successively higher peak. Here I'm going to go there, and I'm also at the same time, I'd like very much to be able to go to right here. Let me just see if I can find something. Okay, there we are. We're all set. Now what I'm looking at is, within the context of the Chapman wave methodology, we look for the lowest low bar. In this case, it's right there. So that's at 1330, at 1330 on the 21st, which is Friday, at immediately at 2054.75. And what we look for are merely each successively higher peak, and we want to count them. And this goes peak A. This is peak B. It's actually B1, B2. If it was just 25 cents higher, we would have got that peak D right there. So it goes to a peak C, 3 higher peaks, and then it pulls back. And what does it do within the context of this? Finally, it makes that leg D right there. And that could be using up time in 10-minute charts. Sometimes you might find that it does take you very nicely to a peak C. Let me just show you something else. This is part of the Chapman wave methodology. In the context of that particular move, and that move started right at 11:30. I'm just getting the right chart, 11:21. A, B, C. There it is. So the reason why I add those technicals, that is why I add the MACD right there. That's the green and red moving averages right there. And the stochastic right there. And then also we've got different moving averages here. It's because within the context of looking at the waveform, there are times when it can really help you. One of the reasons why I quickly grabbed this chart that has, in fact, all the different notation of the technical tools, what I wanted to show is that very often when you get what I call a squash, when in fact the MACD runs really sharply and quickly from the low bar, and the slow stochastic comes up and creates this, what I call the squash between the stochastic and the MACD, very tight plan of pushing with the price moving high, you will go to that C. And this is actually a reason why I wanted to bring this up, is that within the context of our charts we're looking at right now, if I go to the Dow, let me just do this here. I'm jumping around just a moment here. I want to show you something on a technical basis. When you go to this particular chart right here, I'm circling it right there. Look at the way stochastic went beautifully to the upside, and the MACD turned around with a very wide beta, the difference between the fast-moving average and the slow-moving average. Very often what it does is it takes you very easily to the C, and then the stochastic starts to pull back, just as it did here. The difference is that when the stochastic goes into the mid-90s so quickly and holds, that is really positive. And that's one of the reasons why I'm anticipating that in the market, as we're looking at it right now, there's just a really good chance, instead of doing what I call the recycle of an instant restart right there, peak D, and calling this a B. I'm favoring right now the F, the fifth highest. There's the fifth highest mark going to the sixth highest peak, because there's a chance that we will go to a G and then pull back and not go to a second D. For those of you who are not used to this, let me just go back to the 120-minute, to the 10-minute chart and explain what I'm looking at here. It goes from the E-mini, it goes down from the low bar, peak A, pulls back, peak B, and then fairly quickly it goes to a C. In fact, that almost was a C, and it missed it by 25 cents. Look, 2,063 round number high, 2,063 round number high right there. And then what happens is it pulls back and it goes to a C. Everything about this chart says, if I was trading it, I would have said at that particular point, if it broke below this candle right here, the low of the candle of what time is that? Is that trading at 6 or 10 in the evening? I would have said, okay, I'm out. That's it. And then I would have to get a rebuy for this particular move. So it didn't go to the D, and sometimes 10-minute charts can fail. But what happens is it restarted, and it went to a brand new leg A right here, and then a B, and it holds that, and it has another series of parallel highs. And then finally it goes where? To C right there. Okay, right there. It goes to C. And it goes to a D and an E, and then it pulls back sharply right there. All right. So now what we've done is we've caught up to the 10-minute chart, and you could have done this as well, as I say, on what I call the naked chart. Look, here it goes to a C, and I always like to count each successively higher peak or trough, so this could also be called an A to a B, and it uses up time. So that could be a C minus because it failed, and then what does it do? It spirals higher, and I call this a brand new A, B, C, D, E. But if you had no technicals at all, you could have just continued the count, which went to A, B, C, D, pulls back, starts again. You do want to go to at least a D. That's the preference. And then it goes A to a B. Whoops, not a V, but a B. You think after these thousands and thousands of times of typing it in, and what do you get? You get exactly the same result right there. E, and it turns down. So now I'm looking at it and I'm saying, you're up. Now, you remember, in Darrell's work, he has these different, not Bollinger Bands, but he has the trend lines that are resistance points and propellant and repellent points. But in my work, I'm using the letters, and when you get to a D and E, you've got to be somewhat careful. And there it is at E, it pulls back, and now it has to restart again. But if you look at the chart formation, basically what it's looking at is saying, hey, I need a little bit of a timeout. I was struggling, and I need this timeout here. All right there to right there. Just a simple H pattern, lowercase h, or an arch pattern. So we've got our first break coming up. When I get back, we're going to look at some of these different commodities, etc., and we will look at them using just the naked chart. I'll go to the TLT, I'll go to bonds, we'll see what we've got. Basil Chapman, sitting in for Darrell Martin. I'll be right back. It's the Diagnostic Trading Hour, but I'll be sitting in there.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Our folks, we're back, and the Dow's down 9, S&P's up 4. I didn't give any of the numbers earlier, so let's just do that. The comp index is up 31. Very nice. That's because of Apple doing very nicely. And it's at 47.44. You've got bonds at this particular point. So the trends moved up very sharply, and the VIX has moved down. It's at 12.62 in the VIX index. And we've got, let me just do this. Bonds are up 5/30 seconds. You've got gold right now. Gold was just struggling before. Gold is, there it is. Gold is down $1.30 at 11.96, and you've got high-grade copper under 3. Going to watch that closely. And silver is down just a fraction. And you've got crude oil. Did I mention crude oil? Crude oil is down 12 cents at 76.39. So let's go back to, so I had a quick question while I was doing this. So that was the E-mini. Gave you a signal that said it's pulling back. At the same time, I did the TLT, which is the Lehman 20-year T-bond fund, and that's in my 10-minute chart. Let me just show you what I did. This is the naked chart. It went from a low. The TLT had a big spike on Friday, was it? No, back on the 19th, made a low of 118.76, spiked up, single leg A, failure pattern, comes all the way down, then restarts and goes A, B, CD, very quick CD, little doji candle. That's the hint that says, whoops, I'm struggling at this point, pulls back, starts a brand new buy mode. Also, you need to think that it could go to a D, and it goes A, B, C, it goes to a D, pulls back. Now what I've done is I put a down arrow for D, because that was a pretty sharp pullback just on this 10-minute chart. It went to an E and then an F. And at this particular point, it's a pattern that I'm very familiar with. It's the pattern that I call, it's the double stochastic. There's like I'm pretty sure that there'll be like an M formation, lowercase m formation. This is the pattern that we saw in the weekly chart back in 2007, where in the summer there was a very sharp pullback. Everyone thought that this is it. Then it ran up into October and September. Into September, October, just for 2 more peaks in the weekly chart, just like this, to go to an E and F, and then it came down sharply. This is an extension, right arm extension, and then it gaps down, and this morning it starts off again, goes peak A, B, and this should, because it's at a recovery high, go to a C and a D in a 10-minute chart. So that's what I wanted to do. Then the next question that was asked of me in the den was, would I look at the 10-minute chart on Apple? And Apple certainly, Apple has gone to a peak E, and it's just stalling here. Had a very strong opening. Well, closed a little weak on Friday, and then this morning, no, that was Friday. On Friday, it went to 116.03. It ran up to peak A, B, C, D, pulls back from mid-session, and on today, it is now in leg E. It's made a peak E. There's that doji, long-legged doji candle, and it says within the boundary of the 118.26 area high of this candle that was made at 1 o'clock, completed. And this particular candle, this particular candle's low of 117.98. You've got to go to a smaller time frame. So let's just go to Apple in a smaller time frame, because that should set in place some kind of a trading range. Now, am I going to be able to do that right now? Yes, I can. I'll just open it up. So what we've got here in the 2-minute chart, let me show you, this is the one with notation, has gone from this trough over here, and it's gone peak A, B, C. So that's, let me type that in. So here we go. A. Whoops. What happened? Where's my 2-minute chart? 2-minute chart, come back. Apple. There it is. A. Let me make this a little bit bigger. So within this particular framework of that candle, having gone below it and then come back up, it says you've kind of stuck now in a trading range. And that trading range has 76. There you are. It goes to B. Let me just type this in. I'm doing it. It's usually I do it much quicker than this, but it's a little slow because there you go. C, D, E, and this is exactly the pattern. So remarkable how this happened, that I'm looking for in the Dow. Oh, this is great. I'm going to be able to discuss it in a moment. What I am looking for, it went to a G, And that's kind of this exact pattern is what we're looking at. I'll be back to talk about the relationship of patterns, how they are fractals and they repeat. I'll be right back. Basil Chapman sitting in for Darrell Martin. Love to take your calls at 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, so let me just run this, and Because if you do not do anything with the Chapman wave, then these letters right now will probably be a little overwhelming just to be able to decipher them. I don't want to do that, so I'm going to just be real clear about it, that in this 2-minute chart, the pattern that we were looking at, where it went sequentially up in the notation of the Chapman wave, alphabetically A to B to C to D, and then E to F to G, before pulling back. This is a 2-minute Apple chart. You can see I did that based on the fact that the fast-moving average of the MACD was holding so beautifully. Stochastic was holding beautifully, even though it was starting to turn down. That's the red and green line right there and the red and green line right here. And that was the expectation that you can anticipate. I'm going to jump to the daily charts right now to say, you see this? The stochastic is still holding well at 90%, and just right there, you haven't yet crossed negative in the MACD, and it's gone to an F/B. And I'm saying there's a good chance that we've got one more little flurry to the upside. Doesn't even have to make the new high, but that's what I'm expecting, rather than a series of breakouts to the upside that takes you to a brand new buy mode that goes E becomes an A, F is not, but it's a B, and then it goes a C and a D, and even to an E and an F in a brand new buy mode. I'm not anticipating that right now. It can happen, but my bias right now is to say I think that we're really close to some kind of a top. And a number of emails discussing the different things in the volatility index, etc. All I can say is that I'm going to do my best to be able to keep my subscribers apprised of exactly what I'm looking at, and I will be using all these different techniques. Now, here's another good question, and that question was, in the Apple 10-minute chart, how do I know that that is not an A instead of an E? And I thought that was a very good question, because you don't exactly know, other than the chart pattern is very strong, but it has all the it had, up until that red bar right there, all the ingredients of a right arm. I always raise my arm, a right arm extension that then fails. And all I can say is that if Apple goes 1 penny above, then I'm going to call that F. As of right now, I'm not going to call it a recycle, but the very big issue here is, what would you be doing about it if you were trading Apple? If you were doing an intraday trade, then I would have had to have raised my stop very tight after that second candle from the top, from the day's top in the 2-minute chart, 118.26. Next lower high. The next high has a lower high bar of 118.24, just 3 pennies below, but it makes a peak. So what I'd be doing is I'd be raising the stop. If I was trading it, one of my positions I would have taken off already, because every thing about it says you've met your goal, the MACD stochastic are pulling back. If it has a high-level consolidation, that's great. But I would keep another trade, or I'd raise the stop on half the position, and another part of the trade would say, hey, if you go up from here, you have to consider that is A at 118.23. You need 118.24 to get to a B, because if it's a G, you can't, letters in the Chapman wave do not go beyond H. I'm sorry, beyond G. There is no H. That's what I want to say. So because of that, this looks like a recycle, and that tells me that my assessment of this particular candle here, which says that there could be an inside shorter time frame that takes you to, almost to, or just above, is what you've got to be thinking of. And with the break by 1 penny above, I have to now call the 10-minute chart F. I'm not going to even call it F. I have to put down F/B because of the strength. My thinking is that it's more like an F, and that the 2-minute chart might have a couple of little flurries slightly higher by pennies, and that the 10-minute chart within 20 minutes, because it takes you 1 bar to make the high, and then the other bar after that is the one that tells you if it's going to make a new high, that extends it. If it doesn't, it becomes a peak. Whoa, my eyes are glazing over. Let's just look at it, and we'll follow it we've got enough time. I think we've got another at least two 10-minute bars. So this is where one position has a raised stop, always taken off, and the other is held. Because why? Because if I go to the 10-minute chart with the technicals, let me get rid of this. The 10-minute chart shows you that the MACD was just about to turn down, but hasn't yet. The stochastic's very strong at 91%. That's the reason why I would have taken one position off, and I would have held the other position, and then I would be using the Chapman wave count in this particular chart right here to say, okay, let's see what happens next. But so far, it's acting really well. And then I've got some other moving indicators right there, moving averages, and they are saying at this particular point, it's getting a little stretched. Watch it very closely, because this could be the bar that if it closes under 118.05, say 118.03. If a close underneath that would say, okay, very short-term consolidation taking effect, and the very high 117s will have to become support, somewhere around 117.92 to 117.87. All right, so that's that. And a real breakout says Apple's just an absolute leader. Money's just flowing into it. And the next thing you know, it's at 1843, and it's just broken out. That's the reason for taking some position off and raising the stop on another. So here we go. Ask Basil. I would go by this. Yes, so when a peak D has a zigzag retrace, is this a good chance for A where next peak is made, even if above D? If the stochastic is holding really well in the 90% area, you've got to consider that there's internal strength and that any pullback will be very mild. That's the best way to do that. So I hope I answered your question. Now, let me do a couple of other things. I've spoken about the TLT. I don't know where it is right now, or at least 10 minutes. There it is. So it's extended higher. So this, now, if this was less than a 10-minute chart, I would immediately say, you know what, this looks like a Chapman wave phantom peak. These two high bars are exactly the same, and the third one breaks to the upside. So I would call this a phantom peak, change the color, call it B, because I want to be ahead of the game. I don't want to be late. I don't want to be calling C when it's actually a D, and then the market pulls, whatever I'm following pulls back very sharply. I want to be ahead, and that's the rule I have. With under 10-minute charts, it would be, well, I can't do that. This wasn't under 10. I'm just explaining that. If it was a 5-minute chart or less than a 10-minute chart, I would use the phantom peak. So in the meantime, this is a blue, right there. It's still blue, leg B. And I'm expecting C and D in the 10-minute chart to unfold in the TLT. And we had Oda, who gave a fantastic trade, must be over a week ago, on the TLT, and it's done everything that he was looking at. Bravo to Oda. Now, let's do this. I'm not sure if it's an F, but I'm going to go to the January contract of crude oil. Let's see what we can get here. It is an F contract. So this has gone just to a... Now, every once in a while, in a 10-minute chart, you will get a failure pattern. So I have to be very strict. It went peak A, peak B, right there, and then it pulled back, but it pulled back sharper than just a 30% pullback. It went at least to under the 200-period exponential moving average, which says to me you've got to watch out for crude oil, because a failure pattern like here, look, A, B, C, going to a C minus because you're about to break down underneath the left side low bar, very negative. So let me just tell you what I always look at. 3 peaks, 2 or 3 peaks to the upside, and then the price starts to fail and starts to fail significantly. Says watch out. It's not ready to go to fulfill the buy mode going to a D, and it's even possible that it could retest the H pattern. In this case, it's the H pattern. Look, there's the left side. Here's the right with the arch formation right there, and then it comes back and it retests and it breaks it. Okay, so now what I'm going to do is this. Let's look at the VIX index, VIX.X. And it's still pulling back. It is down 30 cents at 12.60. So let's not look at the VIX index because that's not giving me anything just yet. Let's rather look at the inverse VIX, which spiraled up on Friday. Peak A, remember that single leg A up that fails, restarts when it pulls back in time and price. It's exactly what happened there. Now we go A, B, C in the VIX. That's the VS inverse VIX short term. And what it does is it trades on the VIX itself. I believe it's 200% long. And it goes right there to 38.44. And then the high is 38.42, 38.40. This is so interesting. It's worth doing. So yeah, let's take it from this low bar over here, because this is going to help you in looking at the day. Now, what I said to my subscribers this morning, in fact, I'll show you what I said to my subscribers this morning, to my opening call. Oops, not that one. It's this one here. It is right there. What I said to subscribers was, I am anticipating that the Chapman wave trend gauge, which would work today with the Dow in the morning, pulling back to negative, then trying to rally. But I'm anticipating, right here it says, today we should see some early weakness based on the Chapman wave trend gauge, and then a rally attempt with a fairly small range and potentially narrow close. And then I put rally Tuesday. Is that going to happen? Or are we looking at some kind of a top today? We've got to keep in mind that this market is really overextended. So this is the whole. This is the left side has the peak D in the 120-minute chart shown. The VIX index 120-minute chart went to a peak F at 1574, plunged now down to 1290. But this morning it's already been down. It's now trading at 1263. That's even lower. This is the Chapman wave. No, this is Richard Arm's trend index. The way I read it is different, but this is a trend index right there daily, and this is the Dow, and this is the S&P daily chart. And then I do overview and market day, all the different things we are looking at. And that was the question that I had. A number of people sending the question. One of them said, I prefer to look, let's see, was it Larry? No. One of the questions was, I prefer to look at the, I'll find it. Right. Instead of the RTH, I would prefer to look at the XTR. Is it the XTR? I always forget. The XRT. The XRT. Looking at the XRT, it gives me a better reading, the subscriber said, because it allows me to look at volume, much greater volume. The RTH doesn't have all that much volume. I actually look at them both, but in fact, so here's C, and I'm calling it C1. Now it's gone to, this is the 10-minute chart of the XIV, calling this C2. Whoops. Calling it C2, C3, and maybe C4. Says there's a chance that it's going to pop to the upside to make the D, but all of these are giving you at least a warning to say some kind of a quadruple top is in place right now. If it spikes above, you'll be looking at something a little differently. So here we go, and that's C4. So what's happening is that the volatility index is on the upside. This is the inverse VIX short-term trading vehicle, and that's what we're looking at, and that is the strong resistance right there. But in the meantime, back at the ranch, what we really are looking at is the rotational aspect is saying there is enough internal strength to be have maintained the volatility, the stochastic in the 90s. Right now it's finally going down to 90%, and probably very soon we'll be looking at a little bit lower in the 80%, 85% area. But right now, it's still showing strength. So the question came up also, when I just look at the RTH, look at the RTH. Because today it made a higher high, Friday was 69.14, today 69.17. You know, talk about the worst recession since the Great Depression. You tell me, go to your nearest I mean, it is unbelievable. Just in the Northeast, maybe Northwest, maybe in the Midwest, major cities. But now from what I'm hearing, you can pretty much go anywhere. Shoppers are out. And look at this incredible move in the RTH, which is the Market Vectors Retail ETF, holding that 9-period exponential moving average. The expansion has already gone Fibonacci to 261 as we speak right now. This is really something. And I just someone mentioned that Los Angeles was exactly the same. Full. Of course, it's a hub, but still. It's amazing that that's happening. The question, if I would look at the junk bonds. Junk bonds, okay, hey, this is something to look at right now. Very important phase. Because of shorter term, what will bonds do? What will the junk bonds do? I'll be right back. Basil Chapman sitting in for Darrell Martin. I'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects the powerful array of ETFs from a wide range of assets go up and down, and you want tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Hi, folks, we're back, and let me just do this here and just finish up with the VIX funds. There's that single leg A up. I've been talking about it quite a bit in this hour. It's that sharp move up that starts to fail. It can't hold, doesn't go quickly to a B and a C. Instead, it fails. And the stochastic, instead of holding above 80%, it starts to fail and go all the way down. In this case, the stochastic plummets. There's a right shoulder failure in the MACD. And now is the first time that bonds are showing that, this is junk bonds, showing that if there is going to be a move up in bonds, and let me just quickly show you this right here. Let me just grab this chart here. This is the yields. It's stuck in a trading range right now. This is the 30-year, this is the 10-year, and this is the 5-year yields stuck in a range. I can just tell you this, that we're going to watch this as well as the junk bonds, J and K, although they trade a little bit differently. Generally, the trends is the same in the larger context. So we're watching this, and if there is a move in the 30-year above 31.33 for leg B in the weekly chart of the TYX, the 30-year, then I'm suspecting that the junk bonds are going to test from 39.88. They're going to break and test the 200-period moving average in the weekly chart of 40.67. It doesn't have to be a direct relationship. It's just that at this particular time, the patterns seem to be very similar. If, in fact, bonds start to rally sharply, the yields will come down. And that's the way you've got to think about it. It always works that way. Bonds go up, yields come down. Bonds come down, yields go up because there's an inverted ratio there. And now what we're looking at is the junk bonds need to hold above 39.54. If they start trading in the 39.40s, 39.30s, it says, hey, watch out. We're going to test that whole area of that, the candles going from the low of 38.93 to up at 39.65. So that's what I'm looking at. Now, what I want you to do is to go to the, thank goodness I typed it in here, because, TNX, VXN. Oh, this is it. We'll wrap up the show because you've got Dave White coming up after this. Should be a great show as always with Dave. So look at this. This is the VIXN, the 100, the CBOE Nasdaq 100 Volatility Index. This is based on the same way as the VIX is correlated to the S&P. This is related to, I believe it's the Index 100. Futures, the nearest contract, and it's the volatility within that. And look what happened. It went first there in the 1190s to a peak D, the fourth highest peak on the 16th of September. 1905, holds this uptrend support line, starts a brand new ABCD, and it goes to a peak E at 31.17. That's so interesting because the VIX was 30.06. So what we're looking at here is, let me just quickly check, 31.06. So now what we've got is the VIXN is telling us that in the daily chart, the low that was made right there at 13.48 on Friday, now we're going to watch that because it closed below that says all of a sudden you've got this whole area to the left down to the 1279 area. But what it's also saying based on the weekly chart, and this is going to be really interesting. Look at this. Grab it. Let me see if I can do this. Oh, don't take so much time. Right there. Based on the VIX index, is that it's the 9-period exponential moving average at 15.84, that black line. if the fix anytime the starts to trade is at 1441, trade above 1590 in the 16s, let's say, then the Nasdaq finally will have a breather. But look, the monthly chart has made a peak. That's interesting. I'll talk about it tomorrow on my show. The Tiger Conditions are at 11 o'clock in the morning. Have a great day, and stay tuned for Dave and all the other shows. I'll be back tomorrow.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.